Hey everyone, and welcome back to the Gold IRA Blueprint podcast. We're diving deep into gold IRAs today, but with a bit of a twist.
Ooh, a twist.
Yeah, we're tackling the what if. What if your gold investment loses value?
That's a big one. A lot of people worry about that.
Right. And speaking of getting started with gold IRAs, if you're new to this whole thing, we've got something special for you. Head over to goldirablueprint.com/exclusive for a free checklist. It'll walk you through choosing the right gold IRA company. Especially for you American retirees out there, it can be a real game changer.
Absolutely, I must have.
So before we get into the whole losing money thing, let's lay the groundwork. Our source, Gold IRA Blueprint, defines gold investing as buying gold.
Okay, so like shiny stuff.
Exactly. Bars coins or even gold-backed securities. The idea is to protect your wealth during uncertain times.
Makes sense. Gold has been seen as a safe haven for what feels like forever.
Right. It goes way back.
Yeah.
Like ancient civilizations were using gold.
Yeah.
Exactly. It's always had this inherent value. Unlike paper money, which can be printed like crazy, the supply of gold is limited. It's finite.
So that's part of why it's seen as a hedge against inflation and all that economic craziness.
Exactly. When things get shaky, people turn to gold like it's a life raft.
I like that analogy.
Yeah.
So how about getting gold into your IRA? The source mentions different types. Traditional, Roth SEP, simple.
Ah, so many choices.
Right. How do those differ, especially for someone already retired?
Good question. A retiree might already have a traditional IRA from their working years. Contributions there were probably tax deductible.
Okay, I remember those days.
But now a Roth IRA could be interesting. Contributions are taxed up front, but withdrawals in retirement are tax-free. Could be a good move depending on your situation.
So it's not one size fits all.
Nope. Got to look at your individual taxes and what you want out of retirement.
Makes sense. Talk to a financial advisor, right?
Always a good idea.
Okay, so the big question. What if your gold investment takes a hit?
First thing, don't panic. Ups and downs happen even with gold. The source stresses accurately recording any losses in your IRA.
Why is that so important? Just for my own records.
It's about taxes. Properly documenting losses might let you offset gains you've made elsewhere, lowering your tax burden.
Ah, so it can actually help me out.
Exactly. Plus, you want everything neat and tidy for the IRS.
Good point. How do you actually record a loss, though?
A few steps. First, figure out how much you lost. Compare the price you bought the gold at to its current value.
Okay, that makes sense.
Then report this on your tax return using the right forms. Things like Form 8949 and Schedule D.
Forms fun times.
Right. But there's a catch. You can't usually deduct IRA losses directly.
Oh, that doesn't sound good.
To claim the loss, you'd usually have to withdraw the gold and close the IRA.
And that probably means a big tax bill?
You got it. Withdrawing from a traditional IRA before 59.5 can trigger taxes and penalties.
Yikes. So it's not a decision to make lightly.
Definitely not. Needs careful planning and understanding the rules.
Okay, so say you're facing a loss. What are the options besides taking the hit and those potential tax consequences?
The source gives us 3 alternatives: selling the gold, transferring it to another IRA, or just holding on and waiting it out.
Tough choices. Before we get into those, I want to remind everyone about that free checklist we talked about, goldirablueprint.com/exclusive.
Yeah, that's a great resource.
It can really help you navigate all this, especially for American retirees. It breaks down the complexities of gold IRAs.
Definitely worth checking out.
Now back to those options. Let's talk selling. What should people consider if they go that route?
Well, selling might seem like the simplest choice, especially if you're worried about losing even more money. But remember, capital gains tax.
Yeah, don't want to jump from the frying pan into the fire. Can you explain capital gains tax a little more?
Sure. When you sell something like gold for a profit, that profit is taxed. How much depends on how long you held the asset. Less than a year, it's short term and taxed at your regular income tax rate.
So holding on to it longer is better.
Exactly. Hold it longer than a year, and it's a long-term gain with lower tax rates.
Patience pays off, I guess.
It often does. And remember, selling means you're out of the game completely. If you still think gold's a good long-term investment, selling might not be the best move.
That makes sense. What about transferring to another IRA? What's good about that?
Transferring can be smart if you want a different custodian or to diversify your IRA holdings. The key is you're not actually selling, so no loss for tax purposes. It's just a change of custodian, like moving your stuff to a different storage unit.
Ah, I get it. So no need to worry about those tax implications.
Exactly, but choosing a new custodian is important. You want one who specializes in gold IRAs, someone who really gets it.
What should I be looking for specifically?
A solid track record, transparent fees, excellent customer service. They should guide you through the transfer process and answer any questions.
So peace of mind is important.
Absolutely. And don't forget, the IRS has rules about transferring IRA assets. Work with a custodian who knows those rules so you don't accidentally trigger penalties or extra taxes.
Okay, makes sense. So we've covered selling and transferring. What about holding on to the gold and hoping the price goes back up? When does that make sense?
That's all about the long game. If you believe in gold's value and you're in it for the long haul, riding out the dip might be the way to go. Gold has survived a lot throughout history. It usually comes out stronger on the other side.
But the source mentions market volatility. Doesn't that make things unpredictable, especially for retirees?
Volatility is part of the game, even with gold. Prices can go up and down in the short term because of all sorts of things. Supply and demand, interest rates, global events, even just how investors are feeling.
So it's like sailing in rough waters. You might hit some waves, but the ship, in this case gold, is built to handle it.
Exactly. And historically, gold has been a good hedge against inflation. When paper money loses value, gold tends to hold its own. Gives you that stability when things are uncertain.
So it's about looking at the big picture, not getting caught up in the day-to-day.
You got it. If you're investing for retirement, you're thinking decades ahead, not months. Gold's been a store of value for centuries. It's got staying power.
So this all comes back to choosing the right gold IRA company in the first place, right?
Absolutely. Having a trusted partner who knows their stuff can make a huge difference. They can help you understand your options, make smart decisions, and stay on track with your retirement goals.
And speaking of trusted partners, I want to remind everyone about that free checklist at goldirablueprint.com/exclusive. It's like having a guide to help you evaluate companies, compare fees, understand custodian options. It's all about making the best choice for your specific needs.
Couldn't have said it better myself.
Okay, so now let's get into the different types of gold you can have in an IRA. The source talks about physical gold bars and coins and gold-backed securities. What's the difference?
Physical gold is just that, actual gold bars or coins. When you invest in physical gold within an IRA, it's usually stored in a secure, insured depository. You don't have to worry about keeping those gold bars under your mattress.
That's a relief. I wouldn't want to be responsible for that much gold.
Right. It's best to leave it to the pros. They have the expertise and the secure facilities to keep it safe.
So peace of mind and professional handling sounds good to me. But who actually owns the gold in my IRA?
Technically, the IRA custodian holds it for you. You have what's called beneficial ownership. You benefit from the gains or losses, but the custodian manages the physical asset.
It's like renting a storage unit. I own the stuff inside, but the company manages the unit itself.
That's a great analogy. Now let's talk about gold-backed securities. These are financial instruments that represent ownership in gold. But you don't actually hold the gold itself.
So it's a way to get involved with gold without actually having to store it. Why would someone choose that over physical gold?
Well, gold-backed securities can be easier to buy and sell. They're traded on stock exchanges just like stocks. They often require a lower minimum investment too, and you don't have to deal with storage or security. That's all handled by the issuer of the security.
Sounds convenient. Are there any downsides?
One thing to think about is counterparty risk. With gold-backed securities, you're relying on the issuer, whether it's a mining company or a financial institution, to fulfill their obligations. If they were to default, you could potentially lose your investment.
So it's important to do your research on the issuer.
Absolutely. Make sure they have a good track record and seem trustworthy.
So it sounds like both physical gold and gold-backed securities have their pros and cons.
Yeah.
How do you help someone decide which is right for them?
It really depends on their individual situation, their risk tolerance, and their investment goals. Some people love the idea of holding actual gold. Others prefer the convenience and liquidity of securities. A good financial advisor can help you figure out what's best for you.
So no one right answer.
Exactly. It's all about finding the approach that aligns with your overall financial goals and strategy.
And don't forget about diversification. We can't put all our eggs in one basket, even if it's a golden basket.
Absolutely. Diversification is key.
So let's go back to those steps to take if your gold IRA takes a hit. We want to make sure everyone knows what to do just in case.
Good idea. Let's recap those steps so our listeners are prepared.
Step 1, determine the amount of the loss. Gather your records and compare the original purchase price to the current value.
Remember, accurate records are crucial here. Keep those receipts, transaction statements, anything relevant, easily accessible. It'll make things so much easier.
Stay organized. Step 2, calculate the tax deduction. This sounds a bit intimidating, but I'm sure there are resources to help.
There are, and this is where our free checklist at goldirablueprint.com/exclusive can be a lifesaver. It breaks down the tax stuff related to Gold IRA losses and can help you figure out potential deductions.
It's like having a guide through the tax maze.
Exactly. And finally, step 3, report the loss on your tax return. This is where those IRS forms come in. Form 8949, Schedule D, maybe Form 1099-RR.
Those forms again.
It's all about presenting the information clearly, accurately, and in an organized way. Double-check your calculations, make sure everything matches your records. And don't hesitate to get help from a tax advisor if you need it.
Having an expert can give you peace of mind.
Absolutely. Now, before I move on, I want to bring up gold's historical performance again. We've talked about those short-term fluctuations, but it's important to remember gold has a long history of holding its value over the long term.
Like a marathon, not a sprint. Gold's in it for the long haul.
Exactly. And when you look at how gold performed during tough times like wars, recessions, inflation, it often does even better, holds its value when other assets struggle.
So that's why it's so attractive for people looking to protect their wealth, especially as they head into retirement.
Exactly. It offers that sense of security and stability, which can be really valuable when things are uncertain. And remember, we're talking about your retirement savings here, the foundation of your financial future. Making informed decisions based on solid information and expert guidance is so important.
Absolutely. And that's where our free checklist comes in again, right? goldirablueprint.com/exclusive.
You got it. It's designed to help you American retirees make confident decisions about your Gold IRA. It's packed with tips, insights, and resources to help you navigate this exciting but sometimes complex world.
It's like having a personal roadmap to guide you on your Gold IRA journey. Okay, before we wrap up this part, I want to shift gears a bit and talk about diversification.
Diversification is so important, a fundamental principle of investing, and it applies to gold just like any other asset.
So what does diversification look like with a Gold IRA?
It means not putting all your eggs in one basket, even if it's a golden basket. Within your IRA, you can diversify by holding different types of gold assets, like physical bars and coins, gold-backed securities, even shares of gold mining companies.
So spreading the risk across different parts of the gold market, why is that so important?
Because it helps reduce your risk. If one part of the gold market isn't doing well, other holdings in your portfolio can soften the blow. It's about creating a more balanced and resilient investment strategy.
And this ties back into working with a knowledgeable custodian who can help you build a diversified Gold IRA that fits your risk tolerance and goals.
Exactly. A good custodian will be your partner providing education resources and ongoing support.
This has been a really insightful conversation. We've covered a lot, from the basics of gold investing to the different types of gold IRAs, how to handle losses, and the importance of diversification.
We've busted some myths, highlighted the potential benefits and risks of gold, and stressed the importance of working with knowledgeable professionals to make informed decisions.
Before we wrap up this episode, I want to leave our listeners with a thought-provoking question, something to think about as they continue exploring gold IRAs.
I love those thought-provoking questions. Always get the wheels turning.
We've talked a lot about gold being a safe haven, a store of value that can protect wealth during uncertain times. But here's the question. If gold is supposed to be so stable, why does its price fluctuate so much?
That's a great question. And it's something many investors wonder about. The truth is, even safe haven assets are influenced by the market. Gold's price can move up and down because of many factors. Supply and demand changes and interest rates, global events, even just how investors are feeling.
So it's not that gold is immune to change. It's more about its ability to hold its value over the long term, even with those short-term ups and downs.
You got it. Think of it like a ship in a storm. The ship might get tossed around by the waves, but it's built to stay afloat and reach its destination. Gold's similar. Those short-term price movements are like the waves, but its underlying value and track record suggest it can handle those challenges and protect your wealth in the long run.
I like that analogy. It really emphasizes the need for a long-term perspective with gold. Don't let those daily price changes distract you from your bigger goals.
Absolutely. Keep your eyes on the horizon. And remember, gold has been a dependable store of value for centuries. It's stood the test of time, and that's something to consider when you're planning for your financial future.
So to wrap up, I encourage everyone to do some research on gold's historical performance. Look at those long-term trends and see how gold has weathered different economic cycles and events.
And while you're at it, head over to goldirablueprint.com/exclusive and download that free checklist. It's filled with helpful tips and insights to help you make smart decisions about your Gold IRA.
It's all about empowering you American retirees to take control of your finances and build a secure and fulfilling retirement.
Thanks for joining us on this journey into the world of gold IRAs. It's been a pleasure.
Until next time, stay informed, stay invested, and stay golden.
And remember, we were talking about those different types of gold you can hold in an IRA? Physical gold, like bars and coins, and then those gold-backed securities.
Right, right. So fiscal gold, that's pretty straightforward, right?
Yeah.
You own the actual gold bars or coins.
Exactly. And with an IRA, it's usually stored in a secure depository. You don't have to keep it safe at home.
Which is probably a good thing. I wouldn't want that responsibility.
Yeah, it's best to leave it to the professionals. They have the experience and the secure facilities.
So peace of mind, and, they know what they're doing.
Right.
But if my gold is stored somewhere else, who technically owns it?
Good question. Technically, it's the IRA custodian. They hold it for you. You have beneficial ownership, meaning you benefit from any gains or losses, but they manage the actual asset.
Okay, so it's kind of like, I'm trying to think of a good analogy.
Like that storage unit idea we talked about before.
Yeah, you own the stuff inside, but the storage company manages the building.
Exactly. Now, for those gold-backed securities, those are a little different. They're financial instruments that represent ownership in gold. But you don't actually have the physical gold.
So you're basically investing in gold without having to store it.
Yeah.
Why would someone choose that over physical gold?
Well, gold-backed securities, they tend to be easier to buy and sell. They're traded on stock exchanges, kind of like stocks. And often you can start with a smaller investment compared to physical gold. Plus, you don't have to think about storage or security. The issuer of the security handles all that.
Sounds pretty convenient. But are there any downsides I should know about?
One thing to consider is counterparty risk. With gold-backed securities, you're depending on the issuer, like a mining company or financial institution, to meet their obligations. If they were to default, you could lose your investment.
So you really need to trust the issuer.
Exactly. Do your research, make sure they've got a good track record and seem reliable.
So both physical gold and gold-backed securities have their own advantages and disadvantages. How do you guide someone towards the best choice for them?
Honestly, it comes down to the individual, their risk tolerance, their investment goals. Some people just feel better holding the actual gold. Others prefer the convenience and flexibility of those securities. A good financial advisor can help you figure out what's right for your situation.
So no one-size-fits-all solution.
Nope. It's all about finding the approach that fits your overall financial goals and your strategy.
And remembering to diversify.
Right. Yeah.
Even if we love gold, we shouldn't put all our eggs in one basket.
Absolutely. Diversification is key, no matter what you're investing in.
Okay, so let's circle back to those steps you should take if your gold IRA loses value. Just want to make sure we're all on the same page here.
Always good to have a plan, just in case.
So step 1, figure out exactly how much you've lost. You said to gather your records and compare the original purchase price to the current value.
Right. And having accurate records is super important here. Keep those receipts, your transaction statements, anything that seems relevant. It'll make this whole process so much smoother.
Stay organized. Step 2 was to calculate the tax deduction.
Oh.
That sounds a bit daunting, but I'm hoping there's some tools to help with that.
Oh, there definitely are. And actually, our free checklist at Gold IRA, blueprint.com/exclusive, that can be a huge help. It breaks down all the tax stuff related to Gold IRA losses and can guide you towards potential deductions.
Like having a personal tax guide.
Exactly. And then step 3, remember those IRS forms we talked about? That's where those come in. You'll need to report the loss on your tax return using Form 8949, Schedule D, maybe Form 1099-R. It all depends.
All of those forms.
It's all about presenting the information to the IRS in a clear, accurate, and organized way. Double-check your calculations. Make sure everything lines up with your records. And don't be afraid to reach out to a tax advisor if you need a little extra help.
Having an expert in your corner can be reassuring.
Definitely.
Yeah.
Now, before we move on, I want to touch on something we mentioned earlier about gold's performance throughout history. We've talked about the ups and downs you might see in the short term, but gold has a really solid track record of holding its value over the long run.
Right, like it's more of a marathon than a sprint.
Huh.
You got to be in it for the long haul.
Exactly. And when you look back at how gold performed during those tough times like wars, recessions, or when inflation was high, it often did really well. It held on to its value while other assets were struggling.
I guess that's what makes it so appealing to people who are trying to protect their savings, especially as they get closer to retirement.
Exactly. It offers that sense of security and stability, and when things are uncertain, that can be really valuable. And remember, we're talking about your retirement savings here, the foundation of your financial future. So making well-informed decisions based on solid information and having expert guidance, that's crucial.
And that's where our free checklist comes in again, right?
Yeah,
goldira blueprint.com/exclusive.
you got it. It's designed to help you American retirees make those confident decisions about your gold IRA. It's full of tips, insights, and resources to help you navigate this exciting world of gold
It's
IRAs.
like having a personal roadmap to guide you through the process.
Mm.
Speaking of roadmaps, I think it's time to switch gears a bit and talk about diversification.
Diversification. That's crucial. It's a fundamental principle of investing. And it applies to gold just like anything else you might invest in.
So how does that work when we're talking about a gold IRA? What does diversifying actually look like?
It means not putting all your eggs in one basket, even if it's a basket made of gold. You can diversify within your IRA by holding different types of gold assets, things like physical bars and coins, gold-backed securities, maybe even shares of gold mining companies.
So you're spreading out your risk across different areas of a gold market. Why is that so important?
Because it helps reduce your overall risk. If one specific area of the gold market isn't doing well, the other parts of your portfolio can help cushion the impact. It creates a more balanced and resilient investment strategy.
So having a knowledgeable custodian is important because they can help build a diversified gold IRA that matches your risk tolerance and your goals.
Exactly. A good custodian will be there to support you every step of the way. They'll educate you, offer resources, and provide ongoing support.
This has been a really insightful conversation. We've covered so much, from the history of gold to the different types of IRAs and how to deal with those potential losses. We even talked about diversification.
And don't forget, we've busted some myths, highlighted the potential benefits and risks of gold, and really stressed the importance of working with those knowledgeable professionals. You want to make sure you're making informed decisions.
Right before we wrap up, I want to leave our listeners with something to think about, something to ponder as they continue their gold IRA journey.
I always love those thought-provoking questions. Let's hear it.
So we've been talking about gold as this safe haven, this store of value that can protect you during uncertain times. But if gold is supposed to be so stable, why does its price fluctuate so much? It seems a little contradictory.
That's a great question, and it's a question a lot of investors ask. You see, even those safe haven assets, they're still influenced by the market. Gold's price can go up and down for lots of reasons, things like supply and demand changes in interest rates, global events, even just how investors are feeling at any given moment.
So it's not that gold is magically immune to those changes.
Yeah.
It's more about its ability to hold its value over the long run, even with those short-term ups and downs.
Exactly. Think of it like a ship sailing through a storm. The ship might get tossed around a bit, but it's designed to withstand those challenges and ultimately stay afloat and reach its destination. Gold is kind of like that ship. Those short-term price movements, they're like the waves, but its inherent value, its track record suggests that it can handle those bumps and protect your wealth over time.
That's a great way to think about it. And it really highlights how important it is to have a long-term perspective when you're investing in gold. Don't let those daily price changes sidetrack you from your long-term goals.
Exactly. Keep your eyes on the horizon, and remember, gold has a long history of preserving wealth. It's been around for centuries, and it's stood the test of time. That's definitely something to consider when you're planning your financial future.
Absolutely.
Hmm.
So as we wrap up, I want to encourage our listeners to do some research on gold's performance over time. Explore those long-term trends and see for yourself how it's navigated through all sorts of economic situations and world events.
And while you're at it, don't forget to grab that free checklist at goldirablueprint.com/exclusive. It's packed with helpful tips and insights that can help you make smart decisions about your gold IRA.
It's all about empowering you, American retirees, to take control of your financial future and build a secure and fulfilling retirement. And we're back, wrapping up our deep dives into the world of gold IRAs. I feel like I've learned so much.
It's been a really great conversation. We've covered a lot of ground, from understanding gold as a safe haven to the ins and outs of actually putting it into your IRA and what to do if things don't go as planned.
Yeah, we talked about picking the right custodian, those tax implications, and even diversifying within a gold IRA.
And don't forget, we've got that free checklist at goldirablueprint.com/exclusive to help you navigate it all, especially for those American retirees out there looking for a little extra guidance.
Absolutely. It's like having a personal gold IRA guru right in your pocket. But before we send everyone off to download that checklist, I've got a question that's been bugging me this whole time.
Oh, I love a good question. Let's hear it.
So we've talked a lot about gold being this safe haven, this reliable store of value that can protect your wealth when things get rocky. But if that's true, if gold is supposed to be so stable, Why does the price go up and down so much? It seems kind of contradictory.
That's a really insightful question. And it gets to the core of how gold really works in the market. See, even those safe haven assets like gold, they're still part of the financial world. So the
Hmm.
price can be affected by all sorts of things. Global supply and demand, shifts in interest rates, what's happening in the world politically, and even just how investors are feeling.
So it's not that gold is somehow immune to those changes. It's more about its ability to maintain its value over time, even with those short-term fluctuations.
Exactly. Imagine a ship in a storm. It'll get tossed around by the waves, but it's designed to stay afloat and reach its destination, right? Gold's kind of like that. Those short-term price changes are like the waves, but its underlying value, its long history tell us it can handle those bumps and protect your wealth over the long haul.
I like that analogy. And it really highlights the importance of thinking long-term when it comes to gold. You can't get caught up in the day-to-day price changes. You got to focus on the bigger picture and your retirement goals.
Absolutely. Gold has a proven track record of preserving wealth over centuries. It stood the test of time, and that's definitely something to think about when you're planning your financial future.
So before we sign off, I encourage everyone to do some research on gold's performance over time. Look at those long-term trends and see how it's navigated through all sorts of economic and global events.
And don't forget to download that free checklist at goldirablueprint.com/exclusive. It's full of helpful tips and insights to make those gold IRA decisions with confidence.
It's all about giving you the power to take control of your financial future and build that secure and fulfilling retirement.
Thanks for joining us for this deep dive into gold IRAs. We've had a great time exploring this topic with you.
Until next time, stay informed, stay invested, and stay